Here to talk more about the Fed and the path of rates in 2024 is Nick Timiraos. He is the Wall Street Journal's chief economics correspondent. His latest piece is titled "Powell's Pivot Sows Confusion Over When and How Fast the Fed Will Cut." And Nick, explain this to me, because we have heard so many different variations from people's interpretations of what he said, Jay Powell said last week. I mean, to me, he was clearer than ever, but there does seem to be some market confusion about what happened. What was the message that he was trying to send out?
Well, I think the disconnect is that you had the policy statement maintaining a weak tightening bias, right? They were trying to hold on to the option to hike again in their policy statement, which is what they all vote on. But in the dots and in the press conference, and they don't, sit around and strategize on the dots. And in the press conference, that's the chair speaking for the committee. He sounded much more dovish. And so I think that was where you had the surprise, to the extent that you had one. It was almost, Becky, what Chair Powell didn't say than what he did say. And what I mean by that is since July of 22, in the opening statement at every press conference, he's come in there and said, we're probably going to have a period of below trend growth and labor market softening to get inflation back to the target. He did not say that in his opening, scripted remarks at the press conference last week. He was asked about the last mile being the hardest part, and he said, that's what we expect, but so far it hasn't worked out. So there was a little bit of a change both in what he said and in what he did not say.
I think where I hear it most from market watchers and their expectations for next year now, that seems a little difficult for me to try and put together, is this idea that we are not going to see a downturn. We're not a downturn. We're not going to see a recession, but the Fed is still going to cut rates. Do you think that is likely? Is the Fed going to cut rates if you still have a strong labor market and GDP doesn't show you recessionary impacts?
Yeah, I think that was another surprise. If you go back and look at the projections that they produced in September, the SEP in September was more hawkish. And I think what the September SEP was saying, remember, they were still projecting one more cut this year, which they did not deliver. And then, one more hike this year and then two cuts next year. They basically were saying, if you don't get the slowdown, you don't get the cuts. That was sort of the takeaway from the September SEP. The December SEP did not have that takeaway. They are now talking about, so-called normalization cuts, where you simply conclude that if you're hitting your target, or say core inflation is below 2.5%, that's close enough, you do not need a 5 3/8 Fed funds rate. I think, Becky, the other big change has just been inflation. Tomorrow we're going to get the core PCE inflation reading. That is probably going to be 3.1% over 12 months. That's what Chair Powell said last week. And the 6-month measure, you're looking at 1.9%. Maybe if it's high, it's 2%. So they're at their target over the last 6 months. In June, the previous 6 months, you were at 4%. So how can you not ignore the serious progress that they're making on inflation? I think that's, the market's taking a lot from that right now, too. And it's maybe making this game a tug-of-war with the markets different from the past few, where the Fed has said, no, we're not going to do that. And the Fed was right. The market was wrong.
We've had a parade of Fed officials, including Austin Goolsbee and John Williams, who have come through and basically made it sound like they think the market is interpreting things wrong. Do you get the sense that Fed Chairman Powell is unhappy with how the market has interpreted his conversations?
Well, yeah. I mean, I would point to the interview you all had that Steve Leisman had with John Williams. Powell had come out and said they had a preliminary talk about rate cuts in the context of people describing their SEPs. And then John Williams, who is the vice chair of the FOMC, comes out 2 days later and says, well, we really didn't talk about rate cuts. The takeaway there is they were not trying to send a signal that, they're teeing up a March cut, that's now the quote unquote plan. But it's harder, again, for them to push back against a March cut, because even though that's 2 meetings away, a lot can happen over 3 months. And so I think the surprise was that the market saw 3 cuts. It wasn't a promise. It was a projection. They see 3 cuts in the SEP and they say, oh, boy, let's price in 6 starting in March. And so I think it's just going to be a more difficult game of tug-of-war for the Fed right now, because, again, tomorrow we're going to see that they are getting the upper hand, at least over the last 6 months, on inflation. In some ways, this is a first-class problem for them to have, because we're talking about decent growth and lower inflation than the Fed expected.
But Nick, very quickly, if you see higher inflation, and that could come from a lot of different places, let's just say commodities, whether that's oil prices or grains or anything else that's trying to get through the Suez Canal right now that can't make it there. If that ticks up very quickly, could you see this Fed turn around and say, OK, we may have to raise rates again?
Well, I think the first thing you'd see is they would just push back their projections of cuts. They can go back to the higher for longer, whatever you want to call it. I think that's probably the next phase of this. It makes me wonder, what it would take for them to start hiking again. You'd have to see something probably in inflation expectations that would alarm you.